Hello traders and welcome to the channel once again. This is the second part of how to look for a valid order blocks. I hope you've watched the first part and you've learned something from the first part. So today we are going to continue with our order block lessons. Now, from the first part, we discussed a whole lot or a little bit about how to spot a valid order blocks, but we did not do more of live market analysis. So today we are going to be trying to apply what we learned from the previous video on the live markets and see the probability of the conditions or the checklist that we named from the previous episode or from the previous lesson. If you haven't watched that particular lesson, please the link to that particular video is in the description. Try and go back and watch it. Then you come back to watch this particular lesson so that you will understand it properly. So let's go onto the chart and let's see or let's apply the concept that we learned in picking a valid order block. So from the previous lesson, we note some conditions that makes an order block valid. We talked about a break of structure. We also talked about liquidity sweeps. We talked about imbalances. All right, so we are going to be applying some of this concept to analyze the market and see the probability that comes up to how market reacts from order blocks zone based on these conditions. So now the first rule, or whenever we come to our chart or whenever we are going to be picking our order block, the first thing that we are going to be looking out for is the expansion move. All right. Whenever we are going to pick in our order block, we are going to be looking for the expansion move that occur. Either it's a swing leg. All right. Either is a swing leg. Now, once we spot our expansion move over there, our last opposite candle from that particular move is where we find our order block, or is where we picked our order block. But we stated that a valid order block is supposed to be creating must create what we call a break of structure. All right, so we are going to be looking for an expansion. We look for this expansion. All right, we also look for the break of structure. We will look for the break of structure, and also we will look for liquidity. We will look for liquidity around the order block. And also either market is having imbalance around that particular zone. All right, either market is having an imbalance around the zone, then we just pick our order block from that particular zone. So that is going to be the concept that we are going to be applying. So first of all, let's go on to the market and let's see if we can spot any form of expansion move. All right, so if we are looking out for expansions in the market, all right, here we can spot we can see an expansion. All right, the bullish this is a bullish move. This is an expansion. This is also an expansion, or a bullish move from here. This is also what an expansion. So first you look for what the impulses move or the expansions were that market what created. All right, so this is our what expansions in the market. We have this one as well. We have an expansion over here. All right, we also have an expansion as well, and then it's continuous. Now we've indicated our what expansion move over there. The next thing that we are going to be doing is that we are going to be spotting what our break of what structure. We have a break of structure. This is a break of what structure. We also have what another break of structure. We have another what break of structure. Also, we have another what break of structure around this zone, and then we don't really have any clear break of force structure. So within this particular bullish move, we want to spot what the order blocks around the zone. All right, based on what our checklist that we named. So now we are going to be looking out for the last opposite candle that causes what the expansion, and that is going to be our order block. So over here, we see that we have what a bearish order candle over here, and we form this what move. So this becomes the order block over here. Also, we can spot our order block from here. All right, so that is how we keep on marking or indicating our hot order block. So this becomes what our order block. This becomes what our order blocks. This becomes what our order blocks, and over here, the last opposite candle that causes the move is here. All right, so that is our what order blocks that we've marked. So now we've first we've identified our what expansions or impulsive move versus what our checklist is the checklist are expansions or what impulse move. Then we look out for break of what structure. Break of what structure. Now we are going to be we've identified our what break of what structure, which is our second what confirmation or checklist for picking a valid order blocks. Now we are going to be looking out for liquidities around around the order block. So we are going to be looking out for liquidity. So I told you that in terms of what liquidity is, either that particular order block ships what liquidity, that is, let's say there was or there is a liquidity a previous liquidity like this, and then this particular order block sweeps or takes that liquidity off. It could be a candle, it could be some candle wick or anything. We'll just apply it on the live market so that you understand. Or it has liquidity what before it. So talking about liquidity before it could be like equal lows before the order block. or anything inducement, all right, any move that did not really tap on that particular zone. So either the order block sweep liquidity or has liquidity before it. So let's go, or let's analyze some of the other blocks over here that has liquidity around it. So if we come to this particular side and we consider this other block, you can see that we had this particular move over here, but did not really trigger, or did not really got to the point, or did not really mitigate the zone. So this one is a liquidity or an inducement. Mostly I like to use the inducement because my understanding about inducement is that it's a liquidity closer towards an order block. So if we have any order block, that's any move, market move around it and did not really trigger or mitigate the zone, that particular zone becomes a liquidity, or an inducement in the market. All right, so we can see that we have our inducement or liquidity. So we also had a break of structure from this particular point. So with this particular move, sometimes you might not spot the liquidity from the main time frame that you are working with. If you are not getting it from there, you can go a little bit. We have order block, or how to refine order block as well. So we will talk about it later. So you can just switch to a different time frame to see if there is any form of liquidity. So you can see that with this particular one, when we come here, we can refine this order block, and if we refine it, we are seeing this move not really mitigating the zone. So that one becomes our liquidity at that particular zone, or for that particular zone. Let's switch back to our time frame. So we spot our liquidities in the market. All right, and then we continue. So I'm spotting the liquidities. We continue spotting liquidity. So any move that did not really trigger or mitigate your order block, or comes a little bit closer to it, and did not mitigate the zone, becomes your liquidity in the market. Sometimes we have trend line liquidities and other stuff as well. Also, we had a break of structure over here. All right, over here you can see that we had an impulsive move, but there was no break of structure from the extreme. All right, we had another move but did not break structure, and we had another one. So this is the move that actually caused our break of structure from this particular point. So we've been able to identify our third confirmation. The next one that we can include is also the imbalance. If that particular imbalance or inefficiency in the market. So with this particular one, with this particular zone, we can see that we have imbalance. All right, this one was having an imbalance over here, or inefficiency was being created. Inefficiency was being created around that particular zone. So we go here, we are not seeing any much of an imbalance around this particular zone. Sometimes you can switch to the lower time frame to confirm, but if you are not seeing the imbalances as well, that is not a big deal. because we are currently having about 4 or 5 checklists over here. So if at least you are getting about 3 of them or 4 of them, it is also enough. All right, so that is it. We had an inefficiency created over here before this particular move. This was what an inefficiency that happened in the market, or that market was created. So you spot your inefficiency what as well. Then we keep on adding. So considering this checklist that we've named over here and applying it to this particular what order blocks, we can see the probabilities from this particular what order block. We also have entries what confirmations that you can apply. Sometimes could be what, and candlesticks what entries. So over here you see that we have almost a 1:4, a 1:3 risk to reward ratio. You choose or your entry, you enter from the order block, and you keep your stop loss below what your order block. That is your entry what strategy. All right, we had this one as well. Then you target what the next high of the market. Then you target the next high. This particular point, or this particular one, did not actually trigger the zone, but if only we had what trigger the zone and maybe target something like a 1:3 risk to reward ratio, you could see that you could have what hit your target. Over here, like I was saying, sometimes we try to use what the extreme, or people try using a zone that is not valid. From this particular point, we had a move from here, but no break of structure. Market pullback, went up again, went up a little bit around this zone. So this is where the break of structure occurred. So this is not your order block. All right, this is not your order block. This one becomes what our order block. Same thing applies to this particular point. We had the reversal, an impulse move, no break of structure, no break of structure. Then this one, or this move, is what created what the break of structure from this point. And if we look at this particular point, we see that market did not what triggered, or market did not come to what this particular zone, making this one, or making any move that do not actually mitigate this particular point a liquidity point, or a liquidity in the market. So this one was a liquidity. This one too is a liquidity, because it did not, or it did not really what mitigate the zone, although it reacted from this particular order block. But this one, the move that happened from here, if we apply the checklist over here, although we have an expansion over here, we don't have imbalances, or this one also becomes what our extreme point of interest. So you see that market then came to that particular point, and then you see that we had what a very strong move to the upside, a very strong move forward to the upside. So if you are applying this concept with about 1:3 risk to reward ratio, currently market is what reversing, but that is it. So by applying or following this particular concept, you can see the probability of what of you can see the probability of what of the if this particular video helps you to understand other blocks properly, please kindly like this video, give your comment in the comment what section, or if you have any question, and we will attend to your questions as well. Also, subscribe to the channel so that anytime we drop a video, you are going to what be notified, and also keep learning. Thank you for watching, and see you in the next video or next class.